Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, April 17th. Well, mixed trade across the ag space here this morning. Wheat prices are the leader to the upside, currently 4 to 6 better. Corn prices down 1 to 2. Mixed trade in the soy complex. Beans are within a penny of unchanged. Slightly higher meal, slightly lower in the oil. We've got a little bit of a bounce in crude oil, higher dollar, and higher calls on the equity markets. It would also appear our president's blood pressure is also up a notch here this morning as President Trump took to Truth Social this morning, stating that Federal Reserve Chair Powell needs to lower interest rates now and that his termination could not come fast enough. This following Fed Chair Powell's speech yesterday in front of the Economics Club of Chicago, stating that the Trump administration's use of tariffs could drive up inflation here in the near term, while likely moving us away from our inflationary targets. He went on to state that the Fed would do their job without political consideration. Powell's hawkish stance yesterday on monetary policy did weigh on U.S. equity markets. We got export sales here later this morning. Yesterday, the weekly ethanol production report showed production slumped to a 7-month low at just below 298 million gallons. The amount of corn used to produce this ethanol fell below the needed pace here for the second consecutive week. After the close yesterday, the Buenos Aires Grain Exchange reported Argentine corn harvest advanced 5% last week to 28% done. Soybean harvest also only at 5%, well below its historical average. Their production forecasts were left unchanged at 49 million metric tons for corn, 48.6 million metric tons for soybeans. Both are just below the current USDA estimates. Speculative traders were light buyers across the ag space yesterday. We've got money managers now long about 81,000 corn, 45,000 bean oil, while short 98,000 wheat, 87,000 in the meal, and just over 20,000 contracts of soybeans. Open interest did drop nearly 18,000 contracts yesterday in the corn. Montana Renewable CEO Bruce Fleming, he's calling for the Trump administration to raise the at least more than double the mandated amount of green diesel blended in our nation's fuel supply. He suggests a 7.3 billion gallon figure annually, this up from the current mandated level of 3.35 billion gallons, is also well above the 5.25 that was recently recommended from a group represented from biofuel and big oil industries. We'll see. The current capacity here in the U.S. is holding just below 6.6 billion gallons for the past several months. Inside trade for July corn overnight. As we await the export sales, plantings around the central Midwest will likely be delayed with healthy rains this holiday weekend. Inside trade for July beans as well. We got moving average support just below the market near 1040, while resistance at this week's high at 1059. July meal, that's bumping up against resistance at its 50-day moving average. So the July contract that comes in at 306.20, while oil did, for now, reject a trade into new highs overnight. The overnight high is getting pretty close to the April high at just above 49 cents. Week to later to the upside as forecasts just continue to shift. Rainfall in the southern plains, heavy amounts a little bit further east, leaving, I think, some key growing areas in hard red winter wheat getting less than a half inch of coverage in the panhandles of Texas, Oklahoma, and western Kansas. So look for this today's updated drought monitor to show expanded drought readings in the winter wheat growing areas. Resistance for Kansas City, July futures rests at its 100-day moving average at 585.5. Hope you have a great day and a great holiday weekend.